At Everywhere Ventures, we really aim to create a fund that we call community-driven venture capital. So unlike other funds that are kind of one-to-many in support of how they support their portfolio, we really built a community-driven venture model where we have many-to-many support of founders supporting founders. The table stakes economy, when we took a step back and looked at our portfolio over the last few years, we really recognized that the future kind of hinged around three different parameters: the future of money, the future of health, and the future of work. And so those are sort of the driving thesis behind Everywhere Ventures and what we invest in. We started as the Fund New York, which was really a community of founders and operators supporting the future generations of New York founders and operators. As anyone who's spent time in New York recognizes, it's truly a global city. And so at the start of the pandemic, we started to feel the pull toward being a more global fund, and we actually became Everywhere Ventures as almost a fait accompli after we had already started investing around the world. When we make decisions at Everywhere Ventures, we're really conviction-led, not consensus-led. So we really focus around areas that we're personally passionate about that fall into the thesis of the table stakes economy. So typically the future of money, the future of health, and the future of work. Really, when we meet founders, we invest at the very early stage of a company's life. So Everywhere Ventures is a pre-seed fund. We make the joke that oftentimes we find out about a company before Delaware does. So really, when we're evaluating founders, we're looking at characteristics of grit, perseverance, and authenticity, and how they're really going to go the journey and build a big company over the 5 to 10 year horizon that it takes to build a company. Pre-seed is really, as investors, there's often this notion that you don't roll up your sleeves. And I think at pre-seed, we think of ourselves as founders. We think of our community as driven by founders and operators. And we really are one and the same with our community. And so we really enjoy the aspect of rolling up our sleeves and helping founders. And so that's why we're really focused only on the pre-seed. The market in 2023 has proven to be a pretty tricky market, and so we're really focusing on helping our founders extend runway and think about raising cash in new ways. So when companies raised cash in 2021 or 2022, they often sort of oriented around what's my dream burn scenario and how much do I need to raise. In fact, today it's sort of what can you raise, and then what is your budget derived from that amount of money that you're able to raise, keeping in mind that you want to stay alive until 2025, stay alive for 18 to 24 months, and really have the ability to de-risk the business to get to that next bus stop. One of the heuristics we look for in pre-seed founders, again, because there's often not much traction at the early days of a company's life, is the kind of litmus test around how founders make decisions. As we all know, startup land is full of quagmires, it's full of quicksand, and for fast founders, it's just this ability to focus rigorously, think through what's important and prioritize, and not get sort of stuck in the mire, not get stuck in the small things. So we really look toward fast founders and slow founders, indexing around people that are really problem solvers from the get-go. What's interesting about venture capital when we think about different asset classes from fixed income to equities is that if you look at sort of the average returns of venture capital, you might say it's not so different from high interest rates and fixed income or what you could earn in the equity markets. But what's interesting about venture is that it's this power law dynamic. So when you look at outlier managers, they really outperform those markets. And so for limited partners looking to invest in this asset class, it's much more about how do you select for managers who are different, differentiated, and can be sort of those outliers on the horizon. And if you cluster around investing in a group of those, you're going to outperform those other asset classes. And so for those reasons, we really think that venture capital, even in 2023, 2024, are great years to be indexing to this asset class. Everywhere Ventures is a community-driven fund, and so the way that we source, select, and win investments is really around our community. And so for the most part, we lean on this community of 500 founders and operators and close to 300 portfolio companies where we have very quick ability to sort of triangulate around a problem, learn and gain insights from people who've done this before across different sectors and industries. And we leverage that community to both get into early stage deals and then also to support those portfolio companies. I'm Scott Hartley. I'm co-founder of Everywhere Ventures.